Joining us now in an exclusive interview is Alaska CEO Ben Minicucci, along with our very own Phil LeBeau. Welcome to both of you, Phil.
Kelly, thank you very much. Ben, Kelly set things up there in terms of the results for you guys in the first quarter and pulling guidance for the rest of this year. Put into some perspective for us just how soft demand is right now. How much have things slowed down?
Well, hi, Phil. Hi, Kelly. Thanks for having me. Well, I think we're seeing what everyone else is seeing on the domestic leisure front is a softening of domestic leisure demand. And we saw about 3% in the first quarter, 6% in the second quarter, which we updated our guide. But I think just to balance that out, we're seeing also some positive things. You know, on the Alaska side, you know, we had the best domestic unit revenues in the industry. And I'll remind you, we're mostly domestically focused, although we're starting our first international flight here in a couple of weeks. When you look at the integration with Hawaiian Airlines, that's ahead of expectations for us. That merger is coming along really, really well. And our revenue initiatives and integration synergies are tracking ahead of plan. So, you know, despite, you know, the weakness, like I said, on the revenue front for the next quarter because of the uncertainty, the things we can control, we are controlling and we're doing well, which puts me really in a good spot going through the rest of the year.
Ben, you mentioned that most of this is leisure demand being softer than expected, but you also have a big business with the tech industry on the West Coast. Are you noticing tech firms pulling back on their corporate spending?
Yeah, Phil, what we saw was, you know, out of December and January, it was super, super strong. Then in February, it dropped off and into March. It's come back now, so I would say corporate travel demand is back. It's probably not at the yields and the fares that we'd like it to be. So, but I would say demand, both on the leisure side and the corporate travel side, is stable. And I think it's stable throughout the rest of the quarter. It's just not at the fares that we'd like to see them at.
Ben, it's Kelly here, and to echo what you've said, I mean, the analysts also say your setup is very promising. There were a lot of positive trends coming into this. I'm sure you must be as frustrated as everyone with this sudden drop-off that we've experienced. Do you think, are you more exposed to Canadian travelers? Could that be a factor, or why do you think that you're experiencing this, I don't want to call it a sudden stop, but this quick change in demand for flying?
Kelly, it's a great question. Yeah, we're close to the Canadian border, so we do have some travel from Canada, which has impacted us a little bit. But I would say it's just overall across our domestic network where we've seen, you know, that little bit of softness. But again, I think having a long-term view, I've been in this industry a long time. You know, I've seen, you know, through COVID, through the Great Recession, through 9/11. You know, these things will be transient. And I think if I look at what we have in place, our long-term plan, we will get through this in a really, really good spot. We're still going to be, even in a recessionary environment, Alaska will be solidly profitable this year. So I still feel like we'll come out of this okay. You know, 2027, I still feel strongly about EPS accretion and profit accretion that we laid out at our Investor Day.